Well, thanks so much for tuning into this conversation. And as I was talking to our guest of today, Samir Arora, just before the conversation started, that while it's the end of the day is not turning out to be as bad as we would have thought midway through trade. But the talk really is not just about today's trade. Samir, thank you so much for agreeing to talk to us. Would just love to pick your brains around how are you thinking about this whole Western banking crisis and what it could do to force the central banking hands, and if that leads to any kind of implication for emerging asset equities, including India.
So first thing, I think India, every day you become more and more bullish because these issues that are happening in US are related to the banking sector. I think we are well protected from that. Even if you look at various things about all the Indian banks having to meet Basel standards, this, that, norms, but also that if we have these mark-to-market issues, how much is the current loss as relative to equity, and that would be like supposedly 6-7%, whereas many of these banks have effectively lost 100% of their equity if the mark-to-market, even of bonds held to maturity, are counted, and other things related to that. So I would think that India in that sense is at least relatively a standout, although it doesn't show that these days in the market, but plus minus a few weeks, it will settle down. The second thing is that in terms of what the Federal Reserve may do, I would think that these problems with the regional banks or mid-tier banks in US overall has to be deflationary in some sense. Disinflationary, not deflationary. It is effectively like a dampening of economic activity, or effectively already some X basis points, maybe 50 basis points higher rates than would have been. So it would be logical to think that the US will pause, which is what Goldman and all are saying, that they will not hike this time. They can still use harsh language. They can still say that we are just pausing it for now to give you time in some sense. It would be a bit funny that on one end you are saving a bank and on the other end you are raising rates in that 15-day, 10-day period. Now, it does not mean that that alone will make the market celebrate, because the market may say that means they know something we don't know. They are worried about the economy, blah, blah, blah. So, beyond a point, it's always difficult to say what stand the world or the markets will take on, even if there is a pause. And in the beginning, it'll have to be a temporary pause as conveyed by the Federal Reserve. In the end, it may be permanent also.
Interesting. Samir, somebody who I want to name, but is usually very bearish and looks at data and charts very closely, told me that at circa 200 and odd points lower from where we are currently, we probably now trade at almost long-term averages, and therefore this is actually the time to turn bullish. And I was surprised that that person is making that point, because usually he's a bear, but he made this point that now this is the time to be bullish. It's too late to be pessimistic. What's your sense?
No, I totally agree with the fact that it's too late to be pessimistic. But I also don't broadly do it so precisely, because the market has fallen 5% this month. I mean, year to date, 5-6. So if somebody says 6% below is good price and 6% higher is bad, I don't broadly relate to these numbers. But if you look at it relative to emerging markets and all that, then people say, oh, we were trading at X% premium, something like 70%, and now we are trading at 50%, which is in line. And that is not because of anything else in the world, except that till Jan end, the Chinese market went up a lot. Right. So for no other reason except the Chinese market went up a little bit, they said, okay, now our premium is okay. So I would think that broadly speaking, if you look at our market, it has not done anything for 1.5 years.
Yes.
Therefore, we have not become more expensive, less expensive. Rest of the world has become more expensive, less expensive.
No, earnings would have grown over the 18 months. So
yeah, and the earnings would have grown also, exactly. So I would think that broadly it is okay. And then also, my theory is that 1/3 of the market is always doing well. It doesn't mean I get those 1/3 right every time. But 1/3 of the market is always doing well relative to the market.
Sure.
and significantly better than the market. That is just the way I look at the distribution of uh, stock performance in a market, that one third does very well, one third does very badly, and then the rest are around the market. So if you can get the right side and little bit less of the bad ones, your job is done.
Got it. So, do you believe there could be lasting effects of all that's happening on this Western banking crisis, part one? And part two, rolled into that, though disparate questions, but because it's global, I'm still asking if the Fed were not to pause, but were to do a 25 basis points, but sound a lot more relatively dovish or less hawkish, is that a desirable outcome?
So I was initially thinking that they will do 25, saying then the first only one bank had happened, and I thought that was a very specific case. But now, since they talk about so many regional banks having issues, that I don't know. But I think that might be better from the market point of view, because people who are trying to worry about inflation will say they haven't taken their eye off the ball. All these things which the other side will say. If we try to celebrate the pause, somebody else will say, no, this will lead to bigger problem later on and all that. So best is to calm everybody, because actually India, according to me, is doing really well in every different area, broadly speaking. Whether it's China plus one kind of flows, or manufacturing, or the strength of the banks and all that, or even our current account deficit now near zero or whatever, or could become.
But that could be a one-off too, right? In the sense, it could be a quarterly phenomenon, not necessarily a lasting.
How it is there. But over time, no, it could be actual also, because you will replace some amount of consumer electronics imports, or at least, if not reduce, maybe the future growth could be handled by our own production. So that as a percentage, it'll look less. The oil part is okay.
Yeah.
And gold and all, once in a while may convert it, but gold I don't consider as, it's just an investment, right? No. So okay, you don't have dollar, you have gold, it doesn't really matter so much.
Got it.
So it's okay.
Sure. So Samir,
plus sometime in the near future, not now, but after 6-9 months, the US will cut, if not right now, pause, and later on cut. So if the currency becomes stable, that also big pressure off everybody's back, at least foreign investors. Plus, I think that HDFC Bank alone will bring in, my guess this year, $4-5 billion. Just one stock, which is good enough these days to have 4-5 billion extra coming in.
Most certainly. Okay, so therefore, if the Fed does, let's assume what it does and doesn't deviate too much, and if the Reserve Bank of India doesn't disappoint, if you will, and the fact that we've underperformed and so on and so forth, would you be in the camp which believes that this is a good time to start nibbling?
Well, we have nibbled already too much. So, but I have been saying again and again that I think this year is good for India, but in absolute, you might do well, very well next year. But first is that you will do reasonably well this year also. Now, the only angle here is if the if the US thing is much bigger than we can imagine, because also the tools are quite well understood by the US system, and they are very quick in using those tools.
Sure.
Because they found some formula, right? They found one formula that instead of worrying about the assets and the liability, just go and give the bank a lot of capital and get over it, and maybe make it dilutive capital, exorbitant cost capital, but just give them 10-15 billion and move on in life for anyone. But now if they say hundreds of these banks are there, who knows? But the system seems to be willing to respond fast, because they, I think, also believe that over time, just by holding on to something, the taxpayers' cost goes down, because they can, recover it after a few years, and therefore nobody minds it beyond a point. You have to basically go through those cycles, and the government is willing to, in the US, willing to step in fast.
Got it. So my final question, I made it the point that I'll not ask you themes and sectors because there's not a day for that, but just trying to think, is there a sense that you have on, let's say, for example, the NASDAQ or the tech theme in general in the world, if indeed rates are slated to go lower because they've underperformed quite a bit?
No, I don't think they've underperformed quite a bit. In fact, when the NASDAQ was falling, we said that these guys' customers are good. So these customers will give this project and that project. Now, when
okay,
those customers are doing badly, we are saying NASDAQ is doing well. According to me, in 1 month, you have to give guidance. Correct? Tech guys. Do you think any of these tech guys can call up their BFSI client and say, excuse me, what should be your budget for next year? Should I assume that guy will slap him on the head and say, no, can't you read what is happening to my business? So my thinking is that the guidance will be low single digit, like 5%, 6%. And that would be below our GDP also.
Are you talking about Indian IT services?
Yeah.
Okay.
And therefore, I think they will disappoint heavily, and after that, we'll see. Okay. In fact, Indian IT is the worst place because if one end we say 37, 40% is BFSI. And those BFSI guys today are not going to talk about new IT projects. So let us say 50, 60% is standard ongoing projects and 20, 30, 40% is new projects. Who is today talking about a new project of these hundreds of banks? Now, even if it is 2-3% of your business, and that 2-3% goes to zero, that is this game of, previously you may have wanted to guide for 8%, 9%, 6%, 8%, let's say. And now 8 will become 4 to 5. Then you'll be worried, one more bank gone. Let me be a very conservative tech company, IT company. So I think the guidance in India will be very poor too. Maybe somebody will say, I can't guide. Just imagine 40% is BFSI.
Quite a bit. No, but just want to wrap this up with US tech. Any thoughts on US?
US tech? Actually, US tech is a different game. Actually, they are the real good guys in the sense they are all trading at 15, 20 multiples. And some of them are like, Amazon, which everybody thinks, loss making, I think it's 35p. In India, you tell me which consumer or which good company is 35p, nobody. And the Google's kind might be 15, 18, I think, and those. So that is good. But me personally, because we have a fund there, we are sitting right now on 20% cash, but our IT is full, which is why we have done well this year. Not did well last year. Because all some of these like Nvidia is up some 75% year to date. Spotify is up some 50-60%. Even we had 1.5% in these. All of them have done well. But I think that US buying something today, tomorrow in IT and all is too much. They've gone up too much. So I would think NASDAQ also is for the moment up a lot. They have to solve their problem and then maybe the market broadens a little bit.
Got it.
That might be better.
Fair call. Well, about time. Samir, thank you so much for joining us. Much appreciate your time.
Thank you.
And viewers, thanks for tuning in.